This is Business Morning, Wednesday, the 15th of January, 2020. Let's get the show started. I am Bosin Omofayedi. Nigerian U.S. Consul General for Nigeria, Claire Perangelo, says entrepreneurs remain crucial or critical to the continuous growth of the country, the ECOWAS sub-region, and Africa in general. The Consul General was speaking on Tuesday at the Capacity Building Seminar for the first set of U.S.-sponsored Tony Elumelu Foundation alumni here in Lagos. And still talking about business, the Vice President, Professor Yemi Oshibajo, says the country is still open for more direct investment, says there will never be enough money from foreign companies who are willing to do business. The Vice President was receiving a delegation of Turkish businessmen led by Turkish Trade Minister Rusa Pekan, where he says the country can use every form of direct investments that come in particular from big businesses around the world. Ahead of the World Economic Forum 2020 holding in Davos, Switzerland, January the 21st to 24th, part of the program relates to education. The latest report we had was that no Nigerian school was listed among the 16 schools of the future identified by the World Economic Forum as playing a critical role in preparing for the fourth industrial revolution. The WEF 2020 in Davos is launching what is called the Education 4.0 initiative that will facilitate transition to the education of the future. Two schools were selected or qualified from Kenya and Mali among the selected 16 schools on the continent. The WEF initiative, to be unveiled January 21st to 24th, invites education ministers, finance ministers, CEOs from businesses who are champions of education and other stakeholders from around the world for what is called a holistic action to get education of the future start today. Meantime, profit-taking bites 1.2% of the Nigerian Stock Exchange bullish rally on Tuesday, led by MTN 2.7% downside and Dangote Cement losing 1.2%. Those two companies were the two largest companies listed on the NSE by market value. So the Finance Act, no longer a bill. The Finance Act 2020, signed on Monday by President Buhari, is still the basis for discussion. So what's in it for the securities market today? We decided to ask the market experts themselves. One of them, the CEO at Afrinvest Securities Limited, Ayodeji Ebro, is joining us live from the Nigerian Stock Exchange trading floor downtown Lagos. Ayodeji, good morning. Let's have this conversation around this much talked about finance bill or Finance Act 2020. Overall, what's your take on this particular economic tool that the President Buhari's administration intend to use to raise the game, broadly speaking?
Yes, good morning, and thanks for having me. I believe it has both positive and negative implications. So looking at it based on, but overall, I think it's positive because it's more focused in terms of trying to see how we want to encourage investment as well as also the SMEs. And we all know that the informal sector, or the SMEs constitute a major part in terms of their contribution to GDP. So overall, I feel that it's positive. And looking at it in terms of the sector, for investment purposes, if you know for REITs, that's within that space, we know that REITs have not been doing so well in Nigeria. And with this new policy, the issue of duplication of taxes would be solved, such that the rental income from that investment, as long as it's up to 80% is distributed, will no longer be taxed. And that would be positive for investors to look at that area in terms of the yield on that investment. In the insurance company too, for now, the issue of minimum taxes for life and non-life businesses have also been taken out. That is also very positive for that sector. It means that you can carry your losses forward, and you don't have to pay that minimum tax. We overall, especially looking at for mutual funds, for unit trusts have also been exempted from withholding tax, and that would also improve the performance for that. So you are trying to encourage investment, and in terms of the VAT, the list, the exclusion list are also being increased such that it will not also affect the masses. So for me, for us in our view, we feel it's positive for the economy.
Positive for the investment market. We've often talked about how far or distance that exists between the fiscal authorities and the market street, where you are seated, where you are right now. Do you see this finance bill as part of the government's move to get closer to the market street, to get closer to the investors, to the shareholders, companies listed on the stock exchange, the SEC, the NSE, and other securities exchanges? Of course, government already have a very warm handshake when it comes to Naira bond issuance and treasury bills. So we have that on one side. But in terms of the equities market itself, do you think this is raising the curtain, or you think it's deep enough? If we talk about withholding tax, dividend tax, and all those other costs that makes doing business or investing in the Nigerian market a little bit tenuous or discouraging for retail investors in particular?
Yes, I think looking at it from the company, so with SMEs that has turnover of about, I think it's about 25 million, will be exempted from VAT. So this is encouraging the SMEs in terms of business. And so for the regulators, so what from their own hand, what they will also now need to do is, how can they also provide a platform to attract some of these SMEs to begin to see how they can access capital in the market. So like providing like an SME clinic in terms of getting very close to some of these companies at their development phase as much as possible, so that they are able to understand the benefit of also coming to list in the market. But looking at, on the other hand, looking at for the consumer goods that the company, especially look at the brewery sector, that are just trying to see how they are recovering from the excise duty that had been levied on them. That increase in VAT will also be an additional cost. And as a result, we know in terms of also the consumer pocket is also being challenged currently. So, and the stiff competition within that space. So that may not be positive for that particular sector. But in terms of encouraging investment as much as possible, with the new policy in terms of dividend, that would encourage companies to pay out more dividend, because based on the new act, it means that dividend will no longer be taxed. And for investors, especially those that have the dividend yield perspective in terms of investment, would see that as positive, and we may see more interest in our markets as much as possible.
Definitely, of course, this is a Nigerian environment. I'm sure you know Ayode Jebro, as I know that this is a dividend, cash dividend environment. Retail investors in Nigeria love their cash. I'm sure some institutional investors wouldn't mind having their dividend. If you don't pay dividend in the Nigerian environment, well, there's a little bit of a question mark on why you're not paying dividends. So dividend is very key.
Yeah.
So I'm just looking at the finance minister, Zainab Ahmed, has been putting some tweets out out this morning over the last 1 hour, and she's talking about how the finance bill, which has been signed into law by Mr. President on Monday, she says, has recognized the crucial relationship between fiscal policy the regulatory environment, and the strong capital market we all seek to reflect in Nigeria. It looks like I'm just taking this straight out of the mouth of the finance minister. So she's talking about the relationship, just my last question, my previous question to you, about the strong fiscal policy that we need to have in place that will encourage more listings, rev up the secondary trading on the stock exchange in particular. At this particular point in time. So I put that question to you all over again. Do you see this as that's raising the curtain from the fiscal side?
Yes, I think it's positive, and it's exciting to have the fiscal authorities also considering in terms of the participation of how the capital market can help grow the economy. You know, the capital market provide long-term funding for businesses, and also in terms of supporting the economy relative to the kind of funding you get from the banks. So if this generates more interest, looking at it from the dividend perspective, and if you see increased dividend and in terms of the yield looks more attractive, then we'll begin to see more interest in terms of investment within that space. And as a result, even for the currently quoted companies, they would also have more that confidence that they can raise capital in this market. And for the SMEs, I know the NSE is also trying to come up with what we call like a growth board, where companies that are just they are coming up can come and list and also access capital. But from that, I would also suggest that from the SEC angle, which is the Securities and Exchange Commission, as well as the NSE angle, they should see how they can further support some of these companies, provide like a clinic, not just trying to get them to just come and list, how they can nurture them even from the development phase as much as possible. And as a result, as they grow, they would see a reason also to come and list, so that we have more companies coming to list on the Nigeria Stock Exchange, and that will also provide some form of in terms of depth to our equities market.
One of the stories that's been in the news over the last couple of days had to do with the power sector, the electricity transition market, and the power generation, the power distribution companies are the ones grabbing the headlines in terms of whether they needed to be recapitalized. Will the government be part of that process? Should the government sell down its part holdings in the 11 discos, as it were? Should they go straight to the market? Should they go to the bank? What's your view about using the market where you are right now, Ayodeji, to do this recapitalization program moving forward? Would it be able to pull the necessary capital, whether working capital or brick and mortar money that they need to move forward?
Yes, I think it's interesting that when you look at in terms of what the current challenges is, looking at the liquidity crisis within the power sector. If you recap, there have been a lot of intervention funds in 2014, trying to stabilize what we call the stability fund, about 200 billion. Also in 2016 and also 2019. When you look at the total amount of funding in terms of what I would call subsidy, because if you are being asked to charge a rate that is below the market, it means government is really willing to fund this market. About 1.1 trillion has been spent between 2015 and 2019. And capital market provides long-term funding. Most of the capitalization, or in terms of the acquisition or privatization that was done in 2013, for most of them were done using bank loans, which most times are short-term funds. The capital market would be able to provide that long-term fund, whether it may be in form of project funds, it may be in form of bonds as much as possible, even commercial paper for short-term funding. I believe that it's really critical that we look at that. But there's also still a fundamental problem that needs to be solved before the sector can attract capital. As long as the tariff is not cost reflective, as long as the discos cannot recoup as much as possible in terms of the revenue, and that would not make it very attractive. Even now, they can't attract investment. So based on that, if we don't handle that issue of trying to have a very cost-reflective tariff such that the sector becomes more viable, then going to the capital market to raise funding would not be possible. Just yesterday, we heard that I think it was announced that the House of Rep is asking NEC to suspend in terms of increase in tariff. This sent a very negative signal even to private investors, because we know that the discos this sector has been privatized, and they should allow market forces, though there should be some form of control, which is being done by NEC, but they need to make that sector very viable. And just passing rules to, in terms of stop the increase in terms of the tariff, would further make that sector not very attractive. So in terms of now considering it to raise either bond, long-term bond, or even coming to the market to list, to raise equity, that may not be really possible for now. So, but it's something that has very strong prospects. Capital market would be able to provide long-term funding for 10 years. And when you look at even the useful life of most of the assets, between 10 and 15 years, that would also really be able to get funding that matches, that will be able to match in terms of the useful life of this asset. So it's critical that we have to start focusing on how capital markets can help solve the liquidity crisis within the power sector, as much as provide funding for expansion as much as possible.
Ayo, I'm asking, so what do you think would be the best option or package for these discos? Should they do equities? Do you think that will work at this point? And you talk about the life span of those assets, 10, 15 years. So do you think they should just go straight and do bond, or they should do a bit of equity, a bit of bond, a bit of commercial paper, maybe?
I think it's going to be a mixture of the form of capital that you have mentioned. Equity would also be very good, because at least you are sure that you are not obliged to pay dividend you are not obliged to pay dividend. So that would also be able to help in terms of grow the company. You look at it in terms of for bonds, that would be critical, can be tied to the cash flow that you're expecting from in terms of the collection that you're expecting from your customers. So if you are able to raise 7 to 10 year bond, or you even want to start with a 5-year bond so that people see how that performs, that would also help you in terms of, we talked about the expansion, which has not been done in the past few years. Yes, the meter asset provider MAPS scheme, they can also use that to provide funding for that space. And for their working capital, they can also use commercial paper. But I would still like to just emphasize their books currently, or in terms of the viability of the sector currently, will not allow most of these things to scale through. But it will be very critical that it's good that the fiscal authorities are also trying to see how they can also reduce the burden on their own, such that they don't continue to subsidize this sector. So as much as possible,
I think we need to. Thank you so much, Ayodeji, but we need to leave this conversation at this point in time. Thank you so much. We appreciate your thoughts this morning on the finance bill and what it means for the marketplace. 2 minutes. We'll be right back. We're still on that marketplace.